Good morning, everyone. Today we are running on the third day of the event. Over the last 2 days, we talk about PSD2 and how a financial institution can turn regulation into a business competitive advantage. Today, we will talk about innovative customer management from onboarding to collection, the full customer life cycle. buddybank, a new digital bank powered by UniCredit, will illustrate its innovative digital onboarding process. With Credefi, an innovative Bulgaria fintech, we will see how instant lending and financial inclusions is now possible thanks to the integration of blockchain technology. Postbank will demonstrate how it is possible to protect customer portfolio from deterioration thanks to an early warning approach. So, ready to kick off day 3. Thank you.
So, ladies and gentlemen, allow me to introduce Alessandro, who is here with us today. Alessandro, perhaps you would like to introduce yourself. You think you will do it the best. Please tell us a few words about it.
Yes. Hi, everyone. My name is Alessandro Cirinei. I've been working with Experian for just 2 years and a half. My role at the moment is Open Banking Product Lead for EMEA. Prior to that, I worked in the local markets, covering a cluster of countries as commercial solutions manager, and I've always been focused on open banking since the very start of the launch of our proposition. Prior to that, I have about 25 years experience in digital marketing and digital advertising, which is obviously helps because today we are talking about digital channels, and open banking is an integral part of a digital channel.
This is very powerful, and thank you for this, Alessandro. Okay, so let's start. Recently, we talked about PSD2 and who should be interested in open banking. Also, we discussed the technology and data integration and the challenges and opportunities. But as you all know, we are in Experian very much in and for the customer experience. We believe and we support our clients in providing the highest, best possible customer experience. So, Alessandro, what aspects of customer experience are particularly relevant when a client designs an instant lending or a digital onboarding channel?
From a user perspective, the keyword is don't make me think. So it's essential that the user doesn't stop thinking about what they have to do. From that point of view, it is therefore essential to create a totally seamless journey to be intuitive and use logics to create the user experience. Make sure that there are no breakages on the journey of any sort. And obviously, one of the key things that we have to implement is the fact that the tour should be guided. So it's very important to use relevant text, understandable images that help the navigation, ensure that we support the user with a live chat, for example, or with tooltips, or with a frequently asked questions section. At the same time, the user experience for the lender or for the bank is associated with the reduction of the bureaucracy. So a user-friendly journey, it's a journey that doesn't last very long, and it's fast, immediate, and gets to the point.
So the time seems to be crucial here, but what are the benefits of the open banking journey in terms of customer experience? What can we share with our clients here? What is the most important?
Open banking can be completely customized, and we can ensure that the open banking journey is part of the overall journey in a totally seamless fashion, first of all. So there are no breakages of the user experience. the advantages, the benefits are evident, and they are associated both with the reduction of the bureaucracy that I talked about before, and also with the identification. So I would mention 2 points. The first one is the consumer identity, which can be validated thanks to the strong customer authentication, which is a pillar of the PSD2. So it is possible to actually fetch the IBAN and, for example, check whether this IBAN is associated with a name and a surname, or whether it's associated with a fiscal code or a VAT number if it's a company. The second element is the verification. This is something that in the offline traditional channel takes quite a long time to validate, but with open banking, it's possible to verify the income, for example, in a matter of seconds. It's possible to verify the employer and the employment. So it's not necessary to add the salary slip and waste time making the user journey much longer.
That sounds very interesting and very powerful again. So what would you say, what would be the importance of the categorization? How our Trousseau works?
Okay, so Trousseau is a categorization engine, but it's actually a lot more than a categorization engine. I would define it as a vector machine, which is actually capable to understand the spending behavior of a consumer. To this end, it's important to understand the contents of each transaction. And we use a very powerful machine learning technique, which is totally scalable, available in all countries, to assign a description of a transaction to a specific category. We also use additional data points, like, for example, the amount, the recurrency of the payments, the code, and the final result is using a taxonomy of 94 categories for individuals and 53 categories for SMEs to actually understand the spending behavior of the payment account holder. And thanks to that, we can generate a huge amount of KPIs, which can unlock quite a number of use cases.
Typically in Experian, we work with risk departments and risk managers, but from what you've said, it seems to me like this is useful for sales, for marketing, for customer management, and for risk, of course. Are there any KPIs or any instant uplifts of the performance of the financial institution that we could share with our clients?
Yes, the number of use cases you can unlock is quite a number, and the reason is that everything we do in terms of categorizing, understanding the transaction, it's done with a view to model the data. So you might wonder why we have 94 categories for the individual, and the reason is that we make sure that we have a accurate understanding, holistic view of the account, and at the same time, every single category is confident enough. So this is a very important point. In terms of use cases, as you mentioned, we cover all aspects of the credit cycle. Origination is obviously the most common use case, and for this reason, we are using the one-off consent from the user, which enable us to download the entire historical depth of the account, which is available in the API. So you have a long history and you can generate KPIs. Usually, we focus on the affordability for the users and the cash flow for the companies. And we can generate a transactional score, which has a Gini of about between 65 and 70% for individuals, and about 65% for SMEs. We can cover also early warning use cases. We do this in two ways. The first way is to use the past to predict the future. So we can forecast the cash flow of a company. We can forecast also a lot of KPIs, like important ratios, like, for example, the cash flow ratio, the debt to income ratio. So we understand whether the company is actually expected to grow or not. The second way is to use the so-called recurrent consent. So we can monitor the account for 90 days in the future. So we can check the account without having the user to perform a new strong customer authentication. And this is extremely useful to have early signals of vulnerability for users and for consumers and for companies. We also have other additional use cases for marketing, where we can segment the customers, we can cluster the merchants. So we can create predefined buckets and generate propensity index to understand, for example, the next best offer or the propensity to churn. So there are really a lot of use cases. All of them are live. So we have about 20 clients in EMEA. Most of them are working with the original transactional score for origination. We already have some numbers. So, for example, the acceptance rate of, on average, of our client improved by 10%. But the aspect that I would like to emphasize is the fact that open banking enables to improve the swap in and the swap out of the applicants. So you make sure you're swapping in the right customers that would have been not hits with traditional data, and you ensure that the wrong customer, the ones that are likely to display a bad performance, will be swapped out. We also have active use cases for early warning, where we improved we optimized the cost of collection by about between 25 and 30%. And we have marketing use cases, where the aim was to wake up sleeping customers and stimulate the usage of the account, or even the usage of a credit card. And in this sense, the performance was about 30-35%. So yeah, we have several use cases, and we already have a lot of evidence.
I think this is very important, especially for SME with international business, to capture information from different banks and from different EMEA countries. I guess it was working not only for European Union members, but also for the other countries in Europe. Isn't this right?
Yes, Trusso is actually a global product. In Europe, the way we are training the engine, the taxonomies, all the KPIs, they are centralized. So if we get a client need in Spain, and we generate new KPIs for this client, we can make them available to other clients all over Europe. This is happening all the time, and it's great because everyone is contributing to improving the proposition, even the clients.
That's excellent. The world is now the global village, and I think your work is even putting us closer to each other. That's really fantastic.
Welcome everyone. I'm Nataliya Keserova, Business Development Manager at Experian, and I'm delighted to be here today with Ivo Grigorov, the CEO of Credefi. Welcome, Ivo.
Hello, nice to be here.
Hello. Ivo, could you please tell us a little bit more about Credefi?
Yes, of course. So Credefi is a company which was founded in the beginning of 2021. But the idea behind it was born actually a while back. Me and the other co-founder of the company, we have been in the finance sector for more than 15 years now. We have worked in both the public and the private sector. So we have seen quite a lot of deficiencies there, and Credefi was actually the answer to them. So this is how it started. So currently our team is about 10 people, plus we have partners with a number of companies on different levels. And overall, we will launch the platform within the limits of the EU in the next 2 months. So the focus, however, on our roadmap includes expansion to East Asia, the CIS region, and Latin America. Our vision is to bring decentralized finance to small and medium businesses by providing them with the same financial services as banks, but in a more cost and time efficient manner. At the same time, we will expand the decentralized finance space by providing crypto lenders opportunities to lend to the real economy, and thus diversify and hedge against the risks of the volatile crypto markets. So our customer focus is on the borrower side, our SMEs, small and medium enterprises, and on the lender side, we're actually focusing on both retail investor and financial institutions, as well as DAOs, which are decentralized autonomous organizations. So this is, in short, our vision and who we're aiming it at.
You are challenging the competitors playing a different game. Very interesting. What are the elements that better differentiate Credefi from the competitors, and what are the most innovative elements in your business model?
Well, there are two aspects to this question. So, or more precisely, two different competitors which we face. The first ones are from the traditional finance sector, while the later ones are from the blockchain and DeFi space. Our aim, as stated before, is to bridge the two worlds and provide a rather unique service. We are the first movers in that direction, and as ambitious as it may sound, we believe that such a bridge is the future of finance. We differentiate ourselves from the traditional finance competition by offering our customers a very easy access to finance. By employing blockchain technology, we offer services which have very low transactional fees compared to traditional finance, while in the matter of seconds, the funds will be available to them. So the two main advantages are cost and time effectiveness, as well as very easy and customer-friendly experience. The whole process from the application all the way to the disbursement of funds is done on the platform and is completely digitalized. The second layer of competitors which Credefi is facing are the ones from the DeFi segment. What differentiates us there is our three-layer protection mechanism aimed to make our platform as secure as possible for the lenders and the liquidity providers. The three layers which I'm envisioning are using a credit scoring model backed and validated by Experian, which is one of the big three credit scoring companies in the world. The other projects which are in this space are actually skipping this, which kind of exposes them and their operations to a high risk of default by the borrowers. So the second layer is accepting real-world collateral in an easy and user-friendly process. We partner with an EU licensed financial institutions that can manage and liquidate the collateral in case of defaults. This approach is SMEs are used to this standardized pledge process, and it's different from what other DeFi projects are having. Our security model is the third layer which we have. That will cover the time gap between the time of a borrower stops paying and the time their collateral gets liquidated and lenders' funds are recuperated. At the same time, the module will provide additional yield to investors who stake their credit tokens there. So, yeah.
Very insightful, thank you. You've already started explaining about that, but could you please deep dive and share with us a little bit more about the instant lending process dedicated to SMEs?
Sure. Okay, so we aim to ease the lending process to SMEs in several ways. So the first way, enable SMEs to share their financial data with one click, as well as storing it on the chain so that it is visible and easily accessible in the future. Process loan applications and disbursement of funds to the borrowers within 24 hours time frame, compared to traditional finance, which might take several days and even weeks. In the near future, with a collection of on-chain data integration with AI solutions to our scorecards for the sake of accelerating the credit scoring process and making it more efficient and enabling learning and improving to allow our scorecards to be always up to date and reflect the latest market trends. We also provide a wide range of collateral options, both real world and crypto assets, which are not allowed in the traditional sector at the moment. In the near future, we aim to be able to provide also non-collateralized loans to borrowers with proven track record on the platform and who are staking our native token. Regarding the market data, which we have analyzed already, the alternative lending market is growing rapidly. So due to its many advantages over the traditional one, for example, flexible conditions, ease of application, etc. So currently it is estimated at around 300 billion worldwide, but it is projected to double by 2026, and this is the market which we're aiming at.
Thank you. Really insightful numbers, and there is a lot to do there. From what you shared with us so far, it seems that the customers and the customer experience are at the center of your business model. What technology will you use to better serve them?
Yes, indeed they are. And for us, the importance of the insight provided by collection of traditional data, alternative data, and web data are key. The key advantage of Credefi comes from leveraging the unique opportunities which blockchain provides, and namely immutability to records and transactions, the perfect ability to verify transactions and thus maximize elimination of fraud, instantaneous transfer of funds and permissionless access, so anybody can lend on the platform and any company can apply for a loan. In addition to that, the blockchain technology also provides the opportunity for unmatched transparency, as well as limitless opportunities for further functionalities and implementations with other systems. We aim to become a multi-chain project, which will allow us to execute and accommodate transactions on multiple blockchains, thus allowing us to increase our customer base and the liquidity for lending activities. Also, the accumulation of data on borrowers' performance over time will allow us to use more and more artificial intelligence within the credit scoring, automating our operations at lower cost and accelerating the application of processes. We have an excellent symbiosis with Experian in that regard, and combining our expertise in data assessment technologies is going to be key.
Ivo, you're talking about alternative data, new technology, blockchain, innovations. Following that innovative approach, where do you see the benefits of partnering with Experian?
Well, we envision our partnership in several areas, from the support in the risk assessment process, and more specifically, creating together new risk assessment models, all the way to supporting Credefi to launch its services in the Balkans, EMEA, and globally further down. So overall, we consider Experian as a strategic partner in order to overcome all the difficulties associated with credit risk evaluation and other risks regarding the operations. We believe that with the usage of blockchain and mass data access, we can design a bespoke proprietary model, which, with the help of Experian, these models can then be applicable for a wide range of customers, and will also be able to adapt and calibrate themselves with time and AI. And of course, just having such amounts of data will help us with the machine learning technologies.
Thank you. Innovation runs through your veins. Thank you very much, Ivo, for this interesting conversation.
Well, thank you as well, and for the questions. It was a pleasure.
Welcome, everyone. I'm Armando Capone, Chief Customer Officer for Experian Southern Europe. And I'm delighted to be here today with Massimo Bondanza from buddybank. Massimo, could you please tell me a little bit about buddybank?
First of all, what is buddybank? Buddybank is a mobile-only bank, and it's part of a UniCredit group. It was born with a clear mission. We wanted to provide a great customer experience in the banking industry. It seems so easy to tell this simple sentence, but it's not so easy in the reality, because our aim was to bring a kind of clarity in a word sometimes a bit complicated for the user. Wanted to speak a simple language, being empathic but professional, of course, and using the chat as the preferred communication tool, because it's more efficient, first, it's concise, and also gives you an incredible expressive capacity. So we added this chat, and we made it 24/7, and answering with human operators instead of bots. So we wanted to do that because we wanted to give our customer a kind of human touch. We wanted to be your buddy, basically, from buddybank, means this with this simple thing. And it wanted to give a support that was not only a customer support, a generic customer support, but was what we call a concierge service. So this was the aim, and we started about 2.5 years ago, nearly 3 years. And right now we are gaining a good traction on the Italian market. And our major KPI, of course, is the KPI coming from the customer service. So coming from the judgment of the final user themselves.
How important has been the digital innovation to buddybank, and how had that approach influenced the way you onboard new customers?
More than digital, I would say mobile innovation, because first of all, we have no desktop web interface. We are a pure mobile model. Thinking mobile is very different from thinking, let me say, digital. It is a part of the whole, and forces you to master many things. For example, small formats. You are using a small device, not a web desktop interface. You have 2 or maybe 3 right now different platforms, because you have iOS, you have Android, and now there is also the Huawei App Store. Besides, thinking mobile means that also you need to eliminate all what we call a round trip outside the mobile device. So it's not possible for a person that is starting a process on the mobile to end with a fax, or even with, the web desktop. It should finish in the mobile. We have a limited number of fallback options. So thinking mobile means, okay, how we can complete, for in this case, the onboarding process from the start to the end, exclusively on that small device you have, without going outside, without jumping out and doing something else. Otherwise, the people that you are trying to onboard will not understand. For them, it makes no sense to have a different interface, user experience, banking from music streaming or from other things.
We are hearing more and more now about the importance of a customer experience, right? When it comes to customer onboarding. So how important do you think customer experience is right now? And what does a great onboarding experience look like for buddybank?
For me, it's all about being frictionless. Even if it's fully automated, full onboarding process, to enroll a prospect, a new user, a new customer is not always smooth, because the banks performs so many checks and controls, and the number of required data is very, very high. And it's not easy, especially when you are requiring the customer making some actions, like taking a photograph. The user is a potential source of your errors. So you have to drive him, to guide him, and to minimize this kind of error, the number of errors.
Here at Experian, we often talk about the fact that businesses that are enabled to offer a decision in less than 10 minutes could soon be at a competitive disadvantage. So how important is time to yes?
In many cases, it's possible to reduce the time. In many cases, using, for example, AI and automation, maybe also to predict something that the user will expect. And so the real time is real time, is real. But I think that an acceptable delay is good enough for many situations. The KPIs regarding time to answer and time to resolution of the case, for example, in this case of the support, are very important, and are used to monitor the performance of the overall, for example, concierge service. But it depends from the communication method and the way you interact with the customer. A person that is using chat is assuming that maybe that there will be a small delay, maybe 30 seconds, 1 minute. Well, 10 minutes is a long time. Our KPI are much lower of this, but not real time, because we work in a kind of asynchronous mode.
Thinking about a little bit on a traditional customer onboarding experience for a moment, right? So when creating buddybank, what was the biggest challenge you were looking to solve?
Okay, this is easy to answer because our biggest challenge was to create a fully mobile onboarding, because we had no branches. And we have no branches right now. So we have 0 fallbacks on physical assets. So we will not be able to send someone on the branch because something goes wrong. And we want it to be paperless by design. And also our first aim, continues in this way, is to unlock a full current account with all the anti-money laundering controls and checks and whatever. So unlocking a full current account, paperless, with 0 fallbacks, means that you have to take control of the process and be really sure when you are identifying the customer in front of you, with a chat, with selfie, whatever. So we needed technical tools, of course. And but even if for example, looking at the competition, we have excellent onboarding processes by the competition. And sometimes we compare ourselves with them. But sometimes things are a bit different because, of course, every company has its own security checks and standards. In this case, the comparison with competitors are a bit complex because the effort we are making to onboard a customer is higher than, for example, a prepaid or an account not fully unblocked.
What approach have buddybank taken to ensure both speed and accuracy of decision in customer onboarding?
In the process, we do usual things like cross-checking with public and private and internal databases to ensure at least the identity and of the person is in front of you. Of course, we have also the Experian features on anti-fraud detection, for example, for the documents, and other controls of this kind. Accuracy is important in this case because you are not in front of the customer, not in front of the customer. So it's pretty important during the onboarding process.
Related to this, you mentioned about something about machine learning automation. So this kind of thing has proven to improve, of course, the time to yes, the accuracy of the decision, but also reduce operational costs. Yeah? And have you adopted automation and machine learning, and what has been the business impact to this? Right?
We are at a very early stage, Armando. We have not implemented anything so far for onboarding about machine learning. We are testing AI-powered vertical bots for a specific request to be managed by the concierge. So very specific things. As I told you before, interacting with customers is a human stuff. So we are interacting with the people. And for this reason, we know the potentiality of bots, artificial intelligence, machine learning, but sometimes having set up the bank as let's say an empathic bank, and a bank that is close to you in every sense, 24 hours by 7 every day of the year. Well, it's a bit difficult to introduce 100% artificial intelligence-based system for interaction with users.
Last question. For a company like buddybank, right, that has managed to deliver a fully digital onboarding experience. Okay, so what is the biggest lesson you can share with others trying to achieve the same thing?
About onboarding, I think that the most important thing to understand is, it seems a negative thing, but it's not so, is to understand where and why a prospect abandon the onboarding process. And so you have to keep track very well of all the different things that the user is encountered during the onboarding process, and to manage accurately what is happening at the customer side. So tracking and understanding what really is happening in the onboarding process is very important, because it's a continuous improvement, and new things are coming around. So it's a continuous improvement you have to do on the onboarding process. It starts from the first customer and ends to the last customer you have.
Thank you, Massimo. Really clear. Thank you again for joining us. Really insightful conversation.
Thanks, Armando. Thanks for Experian.
Hello, I'm glad to welcome Nataliya Keserova, You have actively worked with Experian in the implementation of the early warning solution. As a reminder, this solution is a customer management solution aiming at identifying pre- and early collection. It makes the risk assessment using internal, external, and business intelligence data sources, and it's running on daily basis. It is one of the most important and innovative solutions in EMEA for Experian. So, Nataliya, can you say some few words about you and what you're feeling about what we have done?
Hello, Vincent. Nice to have you here. I'm Nataliya Keserova for everybody. I'm head of Retail Trouble Assets Group department in Postbank, part of Eurobank Group. I have experience in managing trouble customers for 16 years now, including experience both in retail and wholesale segment. And up to this moment, except several acquisitions that we did in Postbank, the early warning system was the major project that I have participated in, and I had the leading part in it.
Yeah. And so this solution is really oriented for the collection. So markets are more and more saturated, and it is harder to find new customers. So how relevant is for you to have the customer experience in collection?
I should tell you, Vincent, that it's not easy to make customers happy when you're trying to collect a debt from them. But customer satisfaction is an important component when servicing customers, even in debt collection. And for Postbank, it is very important because low customer satisfaction reduces collection rates, and we know it already, increases complaints and adds to legal exposure. Actually, the old days of hitting the customer over the head, metaphorically, of course, with aggressive phone calls is over. In Postbank, we believe that it is important to understand what is happening around the customer that could cause financial hardship. Understanding why they are where they are is very valuable for us, and it is helping us to offer the solution that fits the customer situation the best.
Yeah, and about that, what have been the main challenges in the collection in the last 5 years, let's say?
Of course, one of the biggest challenge was the COVID pandemic. The lesson learned from this situation is that pre-delinquent actions to catch and manage sudden unexpected events is actually the modern approach to collections and proves the most efficient. Close discussion with the customer is they to know that the bank is there to support, but also requires its debt is also essential for us. During the COVID crisis, we understood that almost everything can be done online, including collection and restructuring. It was our advantage that we were already very deep into the project of implementing the early warning system together with you, the Experian team, when COVID crisis appeared. So currently, at the moment, we are able to predict customer behavior on a daily basis. To have a relevant insight on your customer will help you not only manage the quality of your portfolio, but will also keep the level of satisfaction of your customer at a high level. And this is what we believe in.
Yeah, and about that, the technology has improved dramatically in the last 10 years, and it now allows such evolution and such solution that were not available in the past. So how the technology for you have let you support your collection KPIs, and which solutions to be the most effective for you?
Of course, there are a lot of performance KPIs that are important, and the crucial thing for managing and calculating these KPIs is automated collection process. But we are already past that because in Postbank, the collection process was automated long time ago. What is also important for us, as I just have shared with you, is the insight on our customers. This is why we are happy to have the early warning system in our hands, because it allows our collection team to proactively prevent credit risk rather than simply react to it after it is too late to address. The system the early warning system is a system of rules that automatically flags accounts in danger of delinquency, such as those with histories of late or infrequent payments, by using a set of common early warning triggers and an internal and external data sources. All this information is put into one place and provides full customer insight on this. And this is how it is important for the collection and the business as usual.
Yeah, and it makes the solution we have set up together, which is running on daily basis with all these data sources, and that is definitely something completely new also in Experian, and I think in Europe. So how the evolution of collection KPIs look like? So what is the most important to support the business team now?
It is actually understandable that as margins are squeezed in tough market conditions like we are living in, experiencing in the moment, that reducing costs has been a key way to maintain or even improve performance for many businesses. There is, however, a delicate balancing act between ensuring costs are kept to a minimum and at the same time maintaining a sufficient level of customer service. Every customer, including the one that is experiencing financial difficulties, is important for us. This is why, for us, it is good to find the balance that those two key KPIs are met. Usually, in the past, we thought that this cannot be done; it is not possible. But with the early warning system, actually, we can do it. And I will give you an example how early warning system is helping us in achieving this balance. One of the most important considerations that every organization has to take in mind when trying to reduce costs without influencing customer satisfaction is to identify areas in which process can be streamlined without affecting results of the collection process and the customer experience. The early warning system most important scores of customers are the probability to go into higher buckets and the possibility to cure. And based on this, a pool of customers are selected only for written communication, Viber, text, email, automated messages, giving us the opportunity to exclude phone calls for customers who are not at risk. And by this, we hope to reduce redundant interactions at the same time. Organizations, for sure, should look upstream in the customer journey to identify problems that might be causing redundant calls. For example, agents not explaining products sufficiently. By eliminating these problems at the source, we can potentially deliver a significant reduction in costs through preventing redundant calls whilst having an additional benefit of removing sources of frustrations for customers, which is very usually met during the collection process.
Yeah, indeed, and that's definitely where logically I'm asking what could be the evolution. So what's next? What's the bank's focus in the future about the collection? So what's your vision about it?
Well, when I think about the future of collections, there are two words that probably best describe the situation: uncertainty and opportunity. We saw the effects of COVID-19 worldwide, but we also learned a lot of this pandemic. We saw that digital communication is core to customer satisfaction and willingness to cooperate, which is very important for the collection process. And since technology is developing fast, we need to go along in the collection process with this technology development. We have to be able to keep pace with customer behaviors and trends. We have to be able to analyze them, to act very fast, and adapt to the new situations very fast and engage in our customer experience.
Yeah, so that's only the beginning somehow. So, yeah, so that's very good news for you and also for us. So thank you, Nataliya. It was very interesting feedback and input from you. I'm looking forward continuing our relationship and work together. And that's all for me. I have no more questions for today.
Thanks for having me, Vincent. Looking forward with working with you. For sure, we would have a lot of things to do ahead.
Yeah, thank you very much.
Bye-bye.
Bye.
Good morning, Richard.
Good morning.
Good morning.
Good morning.
Richard, based on the topic we just covered during this session this morning, I would ask you what's the view of the at the EMEA level, what our clients are saying, having been part of several CXO or forum and discussing about this topic, indeed, about innovation, digitalization, open banking.
Okay, yeah, thanks, Armando. Yeah, you're right. I mean, I run a number of CXO forums where we get head of risk and head of technology on calls with other customers of ours, and we've done that for right the way through the pandemic. And I think it's been very clear that there's been a shift in attitude towards customer experience in particular. So, you know, I think it's been fairly consistent across most markets that customers have had to move online, and a lot more customers are a lot more comfortable with operating online, and therefore they get a lot more choosy, shall we say, about the providers that they use. That they expect a lot more because they're used to interacting with the likes of Amazon and those sort of organizations in an online way, and they expect a similar level of service. And lots of organizations probably had digitization on their strategic roadmap pre-pandemic. Most organizations had some form of digitization project going on. Some organizations had appointed a head of technology, head of transformation, or a head of digitization. But what we saw was a lot of those projects suddenly became priority number one. And some organizations managed to switch quite easily. Some organizations were found to be a little bit behind everybody else and had to move very quickly. And many organizations are still in that transition phase. But a lot of that is driven by customer experience and the need to be able to offer a high level of positive customer experience in those digital interactions. And I think this is borne down in pretty basic research that we saw a long time before the pandemic, that if you can get your customer experience right, then that drives a good long-term relationship. So, for example, we were seeing in collections already, those days of when you measured the effectiveness on your collections department on the dollars collected for the dollars spent, those days were starting to be the days of the past anyway. We were already starting to see collections departments looking at customer experience and looking at those customers who've been positively recovered from the collections process. If they've been treated well, if the NPS of those customers is positive, they become a long-term advocate of that organization. They become very loyal. They're likely to buy additional products and services. So that change was already happening, but certainly the pandemic has accelerated that. And I've had conversations with customers about ethical collections and how you can approach the collection activity with a customer without putting them in undue stress. Additional stress because of everything that's going on with the pandemic, and trying to understand whether their job loss is temporary or it's likely to be permanent, and how you can restructure the loan and give them payment holidays and those types of things. All what has been termed ethical collections, and it's all driven by the need to drive a better customer experience.
Okay, thank you, Richard. Related to, you just mentioned that, of course, in the last year, there's been several changes in customer behavior, right? But I guess not only customer behavior, but also on the credit profile, okay? And the way the ability to repay their debt, both for individuals and companies. The point is that how now data need to be adapted. Data and the way we use those data need to be adapted to this new environment.
Yeah, so it's an interesting one because I've worked for Experian for 20 years, and in that 20-year period, I've talked to lots of organisations about the power of the data that they already have. So, you know, that idea that if you own the current account or you own the credit card, you have lots and lots of transactional data. And that transactional data can be used to profile the spending activity of the customer, and you can derive a significant amount of insight into that customer. Not many organizations actually did it. And one of the reasons they didn't do it, or two of the reasons they didn't do it, was one, it was quite complicated to manage that volume of data. And two, the technology wasn't really up to the job of analyzing all of those huge volumes of data and making sense of it. And in the last sort of 3 or 4 years, a number of things have happened. The first is the technology has come on a long, long way. So we now have, you know, big data environments, the Hadoops and H2Os of that, and ever increasing power in those types of environments. And at the same time, the advancement in analytics, so advanced analytics, machine learning, AI, they've gone from being a little bit out there to being mainstream. And lots of organizations are now looking at their models and looking at how they can use AI and machine learning. I was talking to one organization who was telling me that something like 70% of their models now have some form of machine learning and AI. That was almost inconceivable maybe 3 or 4 years ago, that organizations would consider using an AI algorithm to make decisions on customers. But it's the only way you can process that volume of data. And then, of course, the third thing that's happened is that there is a need to be able to explain that to the regulator. And the regulator, Experian has developed its explainability model within its PowerCurve strategy management suite, and that is really needed to be able to explain to the customer and to the regulator about how you've made those decisions. So over the last 2 or 3 years, those things have sort of come together to enable what was in theory possible before to be in practice absolutely possible. So the categorization of transactional data, you know, we do that for many customers today. It's I wouldn't say it's easy, but it's becoming a lot easier than it was. And building models and models that learn and adapt around that data is becoming a lot more straightforward. But that's great for the retail banks, for those banks that own the banking relationship and the credit card relationship and things like that. The other significant change, of course, has been the open banking legislation, which makes that data accessible to those financial services organisations who just get one payment per month for the loan or the leasing contract that they might have. They now suddenly have access to all of that data as well. And if you can get the customer to share that data, we can help you to get a huge amount of insight, infinitely more insight into that customer than you ever had before. And it's relatively straightforward. It's available as a service. It's available to plug into your existing decision engines. And so that transition over the last couple of years, maybe 3 years in particular, I think is going to transform the way the credit industry uses data. And of course, you know, we now have a lot more data, you know, structured and unstructured data. You've got data that you can get from social media sites. That will become more acceptable and more usable within the credit industry as organizations and credit committees and regulators get used to the fact that we are using machine learning and AI, and we have the ability to be able to explain how those models are predicting risk and how that transitions into decisions on customers.
Great, really interesting, Richard. And now looking ahead about the future. So you already mentioned this something that will happen in terms of data, but what are the main trends you expect in the credit industry in the future? What are the other things that most probably gonna, change the way we are gonna work in the following years?
Yeah, so I think that move to the more mainstream use of machine learning and AI. So we have lots of organisations who have data science teams. They have data scientists working on these And one of the things that I hear quite a lot is that developing models is quite hard, but becoming more commonplace. Actually implementing them is relatively hard work. And I think there's a stat that something like 60% of all machine learning models that are developed never get implemented. And those that do get implemented only get implemented in a sort of pilot and never become part of the operational makeup of the organization. I think that will change as organizations get more used to the management of the data, because the big issue is the operationalization of the data capture in real time, so that you can use that data in the decisioning, and as I've already mentioned, the explainability to the regulator. I think that will become more mainstream. So lots of organizations, and particularly those organizations that are more innovative, will get an advantage by using that data. The data that's available will become a lot more. We see that over the last few years that there's been an explosion of data. And data in itself has no value. It's just a data pool, a data lake, a data ocean, whatever you want to call it. Actually using that data is relatively hard. What you need is the analytics to make sense of the data, to provide you with insight. And I've already talked about the machine learning and AI, the advanced analytics that is becoming more commonplace. But you then need to be able to put that analytics into some sort of decision, and you need to be able to operationalize that, which I think is one of the key challenges that organizations are facing today. But once you've put that structure in place, the availability of the data in the data lake that you are using, that data lake is only going to get bigger. There's only going to be more data. You're probably going to end up using more unstructured data. We already have products where we use Google search data to predict risk, and we're finding that those models are relatively good in terms of differentiating good from bad. To a certain extent, they are sometimes nearly as good as bureau data in the SME space in particular. So I think a lot more of that type of unstructured data will get used. But I think the big change that's coming is on the technology side. So the move to cloud is almost overnight. We've seen organizations whose IT strategy had been pretty much fixed for the previous 20 years, which was build it ourselves, host it ourselves, and on-premise deliveries of big software projects. Almost overnight, that's completely gone out of the window because of the pandemic, because organizations realize that makes it difficult for them to respond and react to big strategic change. And most organizations that I talk to now have a cloud strategy. Some organizations have switched to a cloud-only strategy. And that makes the access to data a little bit more difficult in some ways, but it makes the turning on of services, the adoption of new services a little bit easier, relatively easy to how it was before. So I think that will be a big change that organizations, and particularly people in the credit risk industry, will have to get used to, because that will open up some opportunities. It'll also create some difficulties in terms of regulation and where the data is stored and those types of things. So they're the things that I think will be driving the agenda on these types of conferences going forward.
Great, Richard. Really good way to close our session today, with a lot of insight about main trends in the credit history, what's happening in EMEA. So thanks again for your participation.
You're very welcome, and hope everybody's had a great conference, and hope to speak to you all soon.
Thank you.
Thanks. Bye-bye.
Welcome back, everyone. We have reached the final moment of Experian Innovation Week. Today, we have heard many inspiring stories from our clients acting in the most challenging and competitive areas of business. This is also honest and sincere confession of the main players of the market, who are the challengers, who are the winners. During these 3 days, thanks to the direct testimony of Postbank, buddybank, and powered by UniCredit and Credefi, we heard a great example of how it is possible to offer better service that can effectively respond to customers' needs in this environment. I would even say it was a story how to redefine possible. This story talks about how these companies adopted to new normal, how they transformed challenge into opportunity, and how they transformed chance into a victory. These are the stories of how they use the technology in the most effective way, what those companies do with the data, how they use the data, how they get the data in an ethical and proper way, how we should respect privacy of the data and customers' right to the data, meaning how, when, and why acquire customer consent and what should be offered to the customers in return. In Experian, we deeply believe in honesty, consumer privacy rights, and customer experience. Some sources in the world say that Experian have more personal data than the Facebook. I don't know if this is right, but if this is right, this puts great responsibility on us, and take it as our promise to you that we will deliver the most coming from the data for you as an expert. Thanks you once again for the participation. Thanks once again to our guest speakers for your contribution and for your experience shared with us. I hope you all enjoyed this event in the same way as I did. I hope you found some inspiration, something interesting, something that you can take home or take it to your business, use it, share, and get some value out of it. And I wish you all the best. And to your businesses, I wish also the best, which means double-digit growth only and nothing else. Stay safe, everyone. Thank you very much, and hope to see you soon on our next events. Goodbye.
Welcome back. We've reached the final moment of Experian Innovation Week. During these days, we listened to business stories, thanks to the direct testimony of the main players of the market. Stories that talked about how these companies have changed their businesses, commercial and operation models by introducing innovations. Innovations to offer better services that can respond to customer needs in a more efficient and modern way. Thank you once again for your participation in this event. I will invite you to the next one, organized by Experian, where we will tell you how we are helping the credit industry to innovate and compete better in the new post-COVID time. Thank you very much. It was a real pleasure to have you here, and see you soon.